Hey everybody, it's CryptoBirb Adrian speaking. Welcome to another episode of the Nest Show podcast. Today we have a special guest who is actually, just joined for the first time ever to our show. So I'm super excited to see how it goes. Ladies and gentlemen, we have Gareth Soloway, who is actually a head trader, 20 plus year veteran of the markets, technical analysis, master, verified crypto trades, day swing trading in the money stocks.com. Ladies and gentlemen, we're going to have so much of interesting discussion about the markets outlooks in 2022, perhaps crypto, perhaps outside crypto as well. So if you're ready to hear what Garrett has in store for us for today, make sure you stay tuned because we are going to go right into discussion. So Garrett, I'm very happy to have you on the show. Please give a little bit of insight, a little bit of the insight to about your story, about the experience, like how is actually come for you to become where you are right now.
Yeah, well, first of all, thank you so much for having me. It's an honor to be on your show, and I look forward to kind of doing my best to kind of help people understand what I do and how I came up, because I think the story is very similar to a lot of people where they're starting now. So I grew up in a middle to lower income household. We didn't have a lot of money. My family, both my parents were teachers, and so they didn't invest at all. And in high school, I got exposed to investing through, an investment club, where kids got together and we kind of played around with fake money and just decided, how did we do? And it happened to be in the late 90s when the dot-com bubble was being created. And the dot-com bubble was very much like crypto, right? Things were going up exponentially day after day. And even though it was a fake account, it was very addicting to see a fake $100,000 turn into 300,000 in a matter of a couple of weeks. So that was like my first exposure to investing. And again, on someone who was, a teenager at the time, I was just like blown away. Like, holy cow, this is the type of money that can be made. And this is coming from a lower middle income family. So right then and there, I said, I got to learn how to do this. I did go to university. I went to a school and I learned economics. Didn't really help me in trading per se. But after that, I started a job at a company called MetLife. I was low man on the totem pole. They said, go do lots of cold calling. I wanted to do investing. I didn't get any of that. So after 1 year, I quit. And then I said, all right, I have $10,000. I'm going to go try to learn how to trade. And I put it in an account. I got leverage on that at the time, 5-1, and I stunk. I was horrible, right? So I learned. I was messing up. I was losing money. I worked 3 jobs on the side. At nights, I was bartending. On weekends, I was teaching bartending. I was catering. Everything I could do to replenish my trading account and use as little money as I could, so I could put it towards learning how to trade. And then, lo and behold, year after year, I started to slowly understand that when you buy at certain levels or you sell at certain levels, there's a higher probability of success. And it was really a trial and error. And I learned the hard way. I paid the market a lot of money early on, a lot of time, but it finally took me to the point of being profitable. And then in 2007, started inthemoneystocks.com. And it's been 15 years running that company. And I recently started verified investing crypto.com, which is just cryptocurrency. And we started that in November. So it's been quite a journey, but I think it's been something that a lot of people can probably sympathize with in terms of the going through the hardships.
Okay, I got you. Yeah, I'm just having straight into the website you mentioned in the money stocks and verified. In well, what was the second one you said about the crypto? Remind
It
me,
was
please.
verified investing crypto.com.
Verified investing crypto. Yeah, that's correct. Okay, so I'm in the right page. And well, I can tell that there is a lot of insights about the overall approach to the education, right? I think
Yeah.
both you and I agree that uh, it's very hard to become a proficient, profitable trader if you are kind of like stuck, in one simple position in terms of your knowledge, right?
Yeah.
The market is so dynamic that you constantly need to improve in the market reading skills, and one of which definitely we can say that the technical analysis is. So tell me a little bit more about this magic of yours with the technical analysis. How does it work for you? How do you treat market analysis, technical analysis? Is there anything special? Is it just a tool? What is the approach?
Yeah, so I keep technical analysis very, very simple. I basically look at a chart. I don't have a lot of different signals on it. A lot of people use these crazy, signals, RSI, stochastics, MACD, all these things. I don't use any of that. I just really look at the charts and I look for patterns that have repeated in history, right? So, when this level, when this crypto comes down to this level, it bounced last time. So I take special note of it and I try to find other things that match at that same level to give me higher probabilities of success. And that's really what technical analysis is. There's no magic bullet. You're never going to win 100% of the time, but you're trying to put the odds in your favor, where if you can win 70 or 80% of the time, you're golden. You're going to make a lot of money in your career, right? So that's basically what it is. And remember, technical analysis is looking at charts. Understand that charts are people buying and selling, right? A chart goes up when someone buys, it goes down when someone sells. What rules people is emotion. So, greed and fear. And so really when you're trading charts, you're trading people's emotions, you're trading greed and fear, which is why one of my favorite tactics is to go counter trend, meaning that when Bitcoin was at high at 65, 69,000, I was seeing signs in the charts that we were likely at peak, euphoria. And sure enough, we have pulled back quite a bit from them. But that's really what the charts are. If you look at, I don't know if people can see my chart here, but
They will. Yeah, we can
awesome.
actually just add it if you will right now.
Oh yeah, perfect. So what
It's
what the
on.
beautiful thing about it is technical analysis, and you can see here I have some trend lines on the charts. But even if I could just remove them, right? So let's actually just start from the basics so people really get a sense of how this is done. And it's not super difficult. The biggest thing is kind of understanding where to connect lines. So here's your chart of Bitcoin, right? And the first thing I noticed was I said, okay, well, here's your high from April and here's your high from November. And then I said, oh, that's kind of an angle. It's slightly angled up. And then I said, well, look at the lows here. Well, this is kind of angled up as well. So what I did was I pulled up a parallel channel line and we do it from that top to that top and extend it out. And then if we drop it down, you'll notice that it gives you the perfect low when we hit 33,000, and we just retested it right here just the other day or just yesterday as well. So basically I look for these type of things and I say, okay, probabilities are going to put me at my advantage if I go long on Bitcoin here, or I went long yesterday, and you look for those moves to the upside, right? And basically the other thing I would just point out here as well is that when we got to 46,000, I was actually bearish at that point and I said it would pull back. And all I did was I connected these pivots, this one to this one to this one, and it really cuts right through, right? So amazingly, you have this low here, this low, it kind of pierced it there, but then look at how you touched it here and then right here. And so you're looking at levels that replicate over and over again. And it essentially is just giving you a little bit of help in terms of determining which direction price is going to go. And it's really amazing, folks, because, I honestly couldn't even imagine trading any other way, because otherwise you're just listening to other people's input. And I always like to do things for myself. I take into account what other people are saying, what analysts are saying, what Bitcoin, players are saying. But I'm always someone who wants to be sure. I want to make my decision off of what I come up with.
Yeah, I got you. This is actually, I had the chart for now, but I do find personally, technical analysis very, very, well, pretty much what you said in terms of like, it's mostly about anticipating what people, have done historically, right? In
Yeah.
similar instances, in similar occurrences. Uh, is it mainly chart patterns? Is it mainly the chart, candlestick formations maybe, or some other like bar, reversal patterns, outside bars, inside bars, whatever you name that? Uh, do you just search for these patterns, or do you actually never really use those, just like you said, oscillators, RSI, etc.?
Yeah, so there's definitely there's three parts to what I use. It's price, which would be a trend line, and when price hits a trend line, right? Pattern, which is kind of what you're speaking of. So you have patterns like head and shoulder patterns, you have bull flags, you have bear flags, and then there's something else that I use called time counts or cycle factors. And time counts are counts in a chart that tend to repeat. So if you look at human psychology, the number 7 comes up so many times, whether you're looking at religious texts, all religious texts, or other things.
Mm.
And there's something in our psychology that has this number repeating. So sometimes what I'll do is I'll say, okay, well, this chart has fallen 7 candles down, and it's also hitting a trend line. So now you have a time count and you also have a trend line. They intersect at that price point. I'm a buyer there. And again, it puts those odds a little bit more in your favor. So some really cool stuff. Like, people always kind of mock lunar cycles and stuff like that. And I always remind people that the moon affects all the big water bodies, the oceans, the lakes, but mainly the oceans in the world, right? Tide goes in, tide goes out based on lunar cycles. So remember, we're 80% water. So I think it's naive to think that the moon doesn't have some play on our psychological being, right? In terms of understanding whether we're bullish, we're bearish, are we depressed, are we happy, those type of things. And then that affects the market as well. So it's a lot of things that go into it. One thing I'll mention is that a couple of the reasons why I was bearish when we were at 65 to 69,000 in October and November is, number one, the futures ETF was just launched. And interestingly enough, if you go back to 2017 highs, there was the Bitcoin futures launched, and that was the high. So, I mean, there's these weird things that repeat over and over again. And if you look at the euphoria in 2017 and the euphoria that was occurring then, very, very similar with the crazy kind of uber bullishness out there.
True. I think this is a fair take, to be honest. And I'm this type of of traders as well. I'm a more of a position trader rather than a day trader for most of the time. While I do, I'd never dare, kind of like reject, those, just like you said, those monocycles, just for instance, right? I had this great interview the other day with Marin, who is actually, of crypto Twitter community, like specifically known for astrology, let's say, skills and astrology like utilizing astrological like insights, inputs, into actual trading, which is pretty impressive and important, and inspiring to watch, I think, for many. And like, if you think about it, right? Again, I'm perhaps not qualified to talk much about the astrology, but like, astrology has been with us since the ancient times, right?
Yes.
Since the pyramid times, since the ancient Egypt, so this is, or even way back, even earlier than this, centuries.
Yeah.
And early, investors, at least per the book records, are actually basing their crops, sales, their rice sales, if you will, or other commodities, other foods, based on the lunar cycles, right? So it's somehow not, as I should say, stupid as many people would think it is. It is not stupid at all.
You're so absolutely correct. And, for instance, I think one of the interesting things is that, since Bitcoin launched in 2009, it's basically been on a 4-year cycle, right? So 2009 launch, 2013 high, 2017 high, 2021 high, 4 years. And then you look at the cycles like, okay, there's 4 weeks in a month, there's 4 seasons in a year. There's so many things that occur in those fours. And then here Bitcoin, which again is based on how people are trading, is trading in a cycle of 4. So you're so right that this type of stuff makes me giddy because it's just so cool to discover.
True. Another point is also presidential cycle, that another one that lasts, for 4 years, right? So there's a lot of specific numbers, just like you said, that people tend to get attracted more often than not. Third time is a chart, right? The 3 times is a charm. Whatever you name that, the 3 is also a magical number in the technical analysis. Round numbers, the psychology of round numbers. We all know that. So yeah, there is a lot of magic, in the technical analysis. But before we move, to the next point of the market outlooks for 2022, Gareth, I want to ask you perhaps your approach about, still within the technical analysis part, but are you of those believers who actually believe that the market discounts everything, or that the market does not discount everything? There is something outside there that is not in the charts. Is there any side you take on particularly?
So I think that the market attempts to adjust to everything ahead of time, but the market obviously isn't quite, there's always surprises that can occur, and the market then has to readjust. And I also think there are periods where irrational exuberance, to use a term that Greenspan used a long time ago to describe the dot-com bubble. But there's periods where there's greed takes over and fear takes over. And that's when you kind of let people's imaginations tend to kind of get the best of them, right? And you saw this in 2008 and 2009. We saw this in the COVID collapse in March of 2020, where the stock market just absolutely got crushed and then came roaring back. But I think for the most part, the market does its best to figure out everything ahead of time. But inevitably, it's impossible because there's always new data coming out.
True. Yeah, there's been, I'm pulling your leg a little bit here because there's been an eternal discussion between the academics and the practitioners in terms of, whether the market is efficient or it's more inefficient. And apparently, the overall consensus is that the market is adaptive, right? That at certain periods, it tends to get, more effective. In the other periods, it tends to get ineffective or inefficient, right? In terms of how it actually just discounts the information for any market. This is some I think valuable insights for every listener and viewer out there for what Gareth just shared. And just to add on top of that, the market takes time to discount certain news, right? And but at the same time, because the market is so heavily populated with the algorithms and with algo traders, with the mechanical trading systems, then those kind of like systems adjust, or should I say discount the information so much more aggressively and so much more quickly than us humans, right?
Yeah,
And
right.
this is, I think, one of the main challenges that many discretionary traders, that many traders who are actually just relying just on their emotions, just on even on chart patterns. I think chart patterns, just like Peter Brandt, there are so many amazing chart pattern traders, yourself included. You have to get the skill, you have to get time, work in your favor. It's not that you just open a book and you find a chart pattern, that is symmetrical triangle or broadening wedge, whatever, and you just go in and make money off of it, isn't it?
No, you're 100% right. It does take time. I mean, I've been doing this now for 20 years, so it did take me quite a while. I wish in my early years that I had gone to someone who had taught me at least the basics first, because I think it would have helped me speed up my learning curve. But again, they always say you're either going to pay the market, for education, or you're going to pay someone else. So I think that's very true.
True. Well said. Okay, Garrett, I have another point on the map for today, which is the Market Outlook 2022. And if that's fine with you, I'd like to give you the stage and a lot of room to discuss and perhaps brainstorm some thoughts coming off, for crypto, coming off for as well for legacy markets overall, for whether or not we are in the bearish markets, Nasdaq hitting 22% but recovering as of today, to the downside. 22%. I think it was more than 22% even to the downside. It was 22.50,
I think it
something
might have
like
been a
that.
little bit more, yeah, but
Yeah.
amazing recovery.
Yeah. So we are going to hopefully just get some insights from you as we look at the charts. S&P
Yeah,
500 ETF Trust. Let's go.
Yeah, so the S&P, and just to mention too, is we did see that big drop, yesterday, at least in the equity markets, even with Bitcoin, and you saw that same kind of fear, right? So we always talk about how the charts are generally trying to find the correct answer of where we should be priced, but emotion tends to take control. And I think you saw that yesterday, where with Russia invading Ukraine, everyone freaked out, the markets collapsed in the overnight, but then once people kind of stood back and said, okay, well, yes, this is horrendous for Ukraine and everything like that, but it's starting to kind of, the markets aren't ending, right? And then you saw the markets kind of roar back because they were too oversold at that point. So I do think that, again, that's a good example of emotion getting the markets out of whack. And believe it or not, as an investor, that gives you opportunity, right? Opportunity comes from things being mispriced. Now, looking at the S&P 500 here, I love showing this chart. Here's your long-term trend line on the S&P, right? And then see right here where it goes vertical in this kind of tight range. That was where the stimulus got crazy, where the Federal Reserve printed so much money. Here in the US, the government was sending out checks basically quarterly of thousands of dollars to every individual in the United States that qualified at least. And you saw basically what I call a market on steroids go crazy to the upside. Now, what's happened here, and this is concerning for the markets, is that you've retraced, you made a lower low, and now you're retracing again. But basically, my theory is that at some point, if the Fed is really tightening and taking away the monetary support from the system, you're going to have to find your way back to the longer term trend, which is in here, right? So again, my guess is if the Fed really wants to control inflation and get it to come down, you're going to have to see this market. Maybe it goes up a little bit higher near term, but then it probably does come back into this longer term trend on the S&P. That goes for the NASDAQ as well. We have to at least come back to that period. Now, my only fear about this is that, that would be going back to this longer term trend would be if the Fed does a beautiful soft landing, the economy stays reasonably strong. The Fed historically has not proven that. They always overprint, which is why we got this ridiculous move to the upside, and they were late on cutting it back. And then they tend to overreact, and they'll try to curb inflation too quickly, which then could send us into a recession. And if we do enter a recession, you're going to talk about going lower than the long-term growth range on the market. So again, you'll get good bounces here in the market, but I honestly am very worried about the market seeing at least another 20+% downside from current levels, which basically gets you into this range right here. All right. Now, having said that, I think it's important for us to recognize that crypto, and we can look at the Bitcoin chart, the Bitcoin chart has already corrected massively. And if there's one thing we know, it's that Bitcoin and cryptos are still viewed as being a risk asset. Now, we all want it to not be a risk asset. We all want it to be kind of the digital gold, where people hold it in uncertainty, but it just isn't there yet. Think of it kind of being like a teenager or an adolescent. It's very new in terms of being around 2009 it began versus the markets hundreds of years ago. So it's still immature. It's still being treated like an adolescent. And therefore, if the markets do go lower, my fear is you will see more downside on crypto, possibly even down to 20 or sub 20,000. And I know people don't like hearing that, right? I mean, I love long-term crypto, but in the near term, I am concerned because if the stock markets continue to go down another 20 or 25%, I can't imagine how crypto in its current state doesn't see more downside. So for me on the Bitcoin chart, this line is everything, right? So very clearly, this is your line to watch. You do not want to see Bitcoin break this line to the downside. If it does, I think you do start heading towards that 20,000 level, which is the December 2017 highs. Now, one really cool thing I like to point out here, and let me just erase these lines so you guys can get a full view on this. And this is going to be why you shouldn't fret. Yes, it sounds scary. 10,000, 20,000 on Bitcoin sounds scary, but look at this pattern. Okay. So we have this beautiful M top, right? Classic M top. Now, what I'm going to do is I'm going to go over to Amazon's chart, which was in the .com bubble when it collapsed, right? We're going to go to the weekly chart, and I'm going to go back, all right? And basically what you see is the same top pattern in 2000 and 99, 2000 as Bitcoin had. Now, the scary thing is that Amazon topped at $112 or so, and it went down to $6 down here. So you're talking 95% decline, right? Which again, if that happens to Bitcoin, holy cow, right? But this is where you should not fret. If I go to a monthly chart on Amazon, I want to show you guys this because this is just so cool. Here's your Amazon chart. Now, this is where that same M top and .com bubble crashed right there, right? So look at where Amazon goes afterwards. So again, my point is that, you may have to go through a .com like collapse in crypto. I've often said that a lot of the cryptocurrencies out there shouldn't be in existence. I mean, it's a lot of crap out there. We have coins that are jokes. We have coins that have no real use case. But just like the .coms, it was the same thing, right? There were a lot of .com companies that were out in the late 90s. They were run out of their parents' basement. They should have never been public. They should have never gone up 1,000%. Eventually, that junk got washed out of the system, and then the best survived, right? So the best being a Bitcoin, maybe an Ethereum, a Solana, an Avalanche. Some of the good stuff survived, and then essentially what you ended up doing was going like this on it. And again, $6 to 3,600 is an incredible percentage gain. I don't know if Bitcoin will do that, but that is a possibility. So I just love showing that, because even though I am midterm bearish, thinking that we might be entering a winter where we could see a flush out, I think the long term is very, very bullish.
True, I got you. I think this is a fair approach, when in terms of understanding, the medium longer term perspectives. Because there is a comparison to the Amazon chart as well. And we are talking about the overall market outlook for 2022. Does it mean, like, am I reading this correctly, that you actually believe that there's like both bull market peak, coming in 2022, or the markets have peaked and we're just seeing some follow through to the downside and eventually 2022, the rest of the year, how do you think it's going to come?
Yeah, I'm in the camp that we did see the peak. And again, part of it is looking at Amazon's chart from the peak of 2000 and how it's so similar. I also think that the Federal Reserve is kind of to blame, not only for the big move up in crypto, but now they're to blame for the downside as they pull money back. And again, as the Fed pulls money back and raises interest rates, it causes this natural deleveraging where you see it in the stock market. You're going to see it in real estate. Real estate here in the US is already starting to come in a little bit. And same thing in crypto. You're going to see this kind of pullback in liquidity, which inevitably will probably lead to further downside. So again, for me as a technical trader, I'm in and out a lot on Bitcoin and kind of looking at these levels. But ultimately in the next 6 months, 8 months, 10 months, I do think we break this lower trend line and you do start to head down even more, again, as the Fed continues to tighten interest rates and basically tighten monetary supply.
I got you. Okay. I mean, what I personally love about technical analysis is that, there is one chart and you would have 10 people telling a completely different story, right? Come on, 10 different stories. And I love, that this is such an amazing debate always to have over the course of the technical analysis, because the same part, the same chart, the same trend line, can initiate and trigger so many different thoughts. So I love it. And I appreciate your input so much. Do you think, talking and speaking of the Federal market outlooks for 2022, and because we've slightly touched upon the war, the invasion, Russia-Ukraine invasion, or the inflation terms, do you have any specific stance in terms of what the Federals are going to do? And before I actually let you expand on that, with the answer, the reason I'm asking is because the Federals are known basically for not committing to their promises, right? So they had made several promises about hiking the rates, and they never really followed that thoroughly, right? So, and I've already started seeing some voices coming out on Twitter saying that I think it was Goldman Sachs, if I'm not mistaken, some paraphrase comment that this Russia-Ukraine conflict may actually delay or cancel the interest rates hikes in March at least, right? So do you have any specific stance? Do you have any specific point? Like, do you believe the Fed, or do you think they're just teasing?
So I think the Fed, in general, being humans, they probably want to do certain things, but they get swayed very, very easily, right? So I happen to agree. Initially, I think the market was pricing in a 50 basis point hike in the March meeting coming up. My guess is they'll use the Ukraine-Russia situation as an excuse to only do one rate hike. So again, already you're seeing it ratchet back down from 2 to 1 hikes in March. So I do think that, again, they tend to want to do something, and then as soon as the market throws a tantrum, they kind of back off very, very quickly. Now, having said that, the Fed, you're right, hasn't followed through great in the last 20 years. But in the last 20 years, we had inflation around 2%. With inflation near 8 or 10% now, it's almost keeping their feet to the fire, right? So where it's going to be a lot harder for them to just say, oh, let's not do rate hikes, because then what happens when inflation goes to 15 or 20 or 30%, right? So this is going to be the real kind of interesting test for the Federal Reserve coming up of how they behave with inflation in the system. My forecast is saying that they will not hike as much as estimates are saying. So I think JP Morgan had said they might do 9 rate hikes in 2022. I think at best it's half of that. And I think what will end up happening is that as they hike rates, it's going to drive the stock market down. So then you have this, then people with their retirement accounts, they're going to be down 30, 40%. And you're going to have a slowing of the economy because of it, right? So people aren't going to spend as much. They feel poorer. So they're not going to go on that extra vacation. And because of that, it's going to cause unemployment to rise. Now, our Federal Reserve has a dual mandate. It's monetary policy, but it's also unemployment. Now, if they can get inflation to come back to, let's say, 5% or under, which I think they can do, and then all of a sudden unemployment rises, let's say, to 7%. Now the question is, with the scales tipping the other way, do they then start printing again? And I actually do think they will. So believe it or not, I agree with you that the Fed is going to be always forced to print. They'll have these periods where they kind of try to tighten, and then the economy suffers, and then they have to do looser monetary policy again. And ultimately, that's another bull case for Bitcoin. It's another bull case for gold. I just think that, again, most likely Bitcoin doesn't make that low until late 2022 or so, and that'll be when the Fed starts to printing again.
Got you. This is very, very interesting approach, definitely. What I'm thinking of that bubble, I think the Federals, were actually then at the edge of deciding, whether to let the market sink in further, and move it into a proper economic recession, or somehow, just of course, initiate the proper printing, right? And somehow try to get this inflationary, debt way out of the financial crisis. And it seems that the Federals, the way I look at it and the way I understand it, are extremely fearful of what happened, during the Great Depression, 1929-32, right? And it seems that they would do kind of like everything they can just not to fall, into the proper recession, not to pull a proper, I should say, give this, Great Depression to zero, right? And while we are speaking of it, there is of course a certain set of economic tools, just like you said, for measuring the unemployment, just for instance, or CPI. Do you have any specific favorite tools for analyzing the macroeconomics, or that you can fairly apply in the technical analysis? So your favorite set, to put it simply, for the TA, for the stocks analysis, do you have something like that?
Yeah. So, and just before I go into that, one thing you had just mentioned is very true. Is that I'm a big believer that cycles should be naturally occurring, right? So we just talked about prior, the seasons, the weeks in a month, this kind of cycle of four. And I truly believe that if you let the economy be on its own, it would naturally have this kind of upslope and then gentle downslope and then upslope. And that's what history has shown us. Yes, we've had big drawdowns, but really, as long as you don't have people messing with the cycles, then you have the drawdowns are more minor. And I really worry that the Fed has prolonged the expansionary period for such a long time that it then creates a bigger recession, nastier, more like 1929 or 2008, 2009. And I do think, again, it's people trying to mess with the natural course of things that then causes more problems in the long run. Now, going to what you were saying about what kind of things do I use? I mean, for the most part, I just try to think outside of the box, right? I always try to think 2 steps ahead, and I try to say, okay, if the media is saying this, what's another way of viewing it, right? Because the media is what is going to influence the investor. When you hear something on here, we have CNBC and Fox Business and all these other stations, and they're always talking about these stocks are going to go up. I actually look for other thoughts, right? So one of the things I was saying was when Russia did invade, I said, you know what? Yes, this is horrendous and it's horrible, but is it going to be a reason for the Federal Reserve to maybe not raise rates as much, and therefore technology stocks are a buy? And certainly what we saw almost immediately, the markets rallying off the low. So the way you do it is you take emotion out. If you can remove emotion as an investor, you will see things very, very clearly and actually being able to put yourself on the right side of trades oftentimes.
True. I love it. I mean, this is something that I can only agree upon personally, right? In my personal view, just like you said, it's somehow fighting the natural cycles, right? In terms of delaying something that comes inevitable, or something that becomes an inevitable snowball effect, right? That just
Yep.
grows bigger and bigger. And but it doesn't seem the inflationary path that the federals have been getting ever since taking down the gold standard in 1971.
Yeah.
uh, I don't think it's going to eventually go smooth away like that. But
Yeah.
speaking just more of those tools, just like I said, um you know do you happen to have any well, because the tools are the books as well, right? I personally consider books, the technical analysis books, trading books, to be very important tools in my personal trading career. Do you have your any favorite writers, analysts, that you follow strictly, that you follow and then check on them? uh yeah.
Yeah, I mean, I think one thing I think that every investor should pay attention to and learn about is Fibonacci. Fibonacci is very, very important. What I love about Fibonacci is that it's naturally occurring in nature, right? So you'll hear people doing, oh, that's a Fibonacci retrace of 0.618 or whatever it may be. And what's fascinating again is that it crosses over not just humans but to nature as well, and anything that you're going to see in nature is naturally going to be more important when it also occurs in the market. So like, if you look at the petals on a rose, it's spaced out in a Fibonacci sequence. There's so many things like that occur. So Fibonacci is definitely one. I don't have any amazing books that I'm aware of that I would recommend. I think there's a lot of basic technical analysis books that'll tell you what a candlestick is, what a bottoming tail, a topping tail. That would be, you could probably just go online and find some good information, or even some YouTube videos on that type of thing. But I'm not aware of any of my favorites in that respect. But certainly the more well-rounded you can be, I think the better. You want to keep a very kind of withdrawn view, meaning that I want to learn about A, B, C, D, E, F, G. But then I also want to decide, well, which ones do I find to be the most useful for me? And then you can get rid of the other ones. Use what works for you. I think that's so important. There's many ways to make money in the market. The key is doing it what works for you.
True. I mean, this is very interesting, take overall, because like it just makes me. It just reminded me of this one, I think, tweet that I saw. I think it was Peter Brand again on Twitter. I think it was 2 years ago or even 3 years ago. But it just stuck in my mind so badly, because it was so much, so much strange. I'm talking about this new market opened back then to futures traders that basically did let you bet, allowed you bets on the cattle or cows, the living
Mhm.
stock, in terms of uh, you feed the cows with specific, just specific, food, and you bet to which hole they're actually going to go and take a dump into, just put it
Interesting.
smoothly. And apparently you could really bet on that, and they launched the futures on that. And it just it's just hard to imagine, finding somebody just Livermore, or even Warren Buffett, ever talking about things like that. So it's just whatever works for you, just let it work for you, and that's all, right?
That's right. And I think again, free thinking, think outside the box, try to be someone who, when you hear everyone talking about something, always try to think, wait a minute, if everyone's talking about it, maybe I need to think a different way. And usually that other way is going to be the correct way.
Gotcha, Garrett. I think as we are nearing to the end of a show, we still have 1 or 2 points left on the map today. And Garrett, I think, well, our viewers and listeners, have already appreciated, what you've shared with us so far. But speaking of, well, some perhaps final takeaways, do you have some final golden line that you would love to leave, well, our viewers, listeners with, so that it somehow resonates better?
Yeah, the biggest lessons I've learned are that, you never want to overcommit to a position, even if you think you're right, because the more you think you're right and the more you think it's a no-brainer investment, usually the more chance it is of being incorrect. So what I've done, and this has been one of the biggest changes that has made a huge difference in my investing and trading, is that when I go into a position ahead of it, I always decide how much money I want to put in that trade. So let's say it's $100,000 in a trade, right? What I'll do is I'll say, okay, I really like this level, but I'm only going to put in 1/4 of that amount, because you have to. And again, this comes from experience of thinking I was going to be right and then being wrong. You want to stay humble. The markets can change on a dime, whether it's crypto, whether it's stocks, commodities, and you want to be able to react. And if you commit all your capital right away, you have no way to react to something when it changes. So again, what I do is I like to kind of dip my toe in the water on a position. Then I have lots of space to add, assuming my thesis is still correct and that it still makes sense. And ultimately, I can dollar cost average. And that has been an amazing change, especially with technicals, because one technical support can fail and maybe two, but the odds when you have probabilities you're in favor of 3 in a row failing are very rare. And eventually you'll get that pop back up. So I think that's a big one. I think also, just remember that you never have to, when everyone else is telling you something, everyone's saying jump off a bridge. You don't have to jump off that bridge. There'll always be another trade. There's never been a situation where I said, oh, darn, I missed that trade. And there's never been another one in my life. There's always another bull market somewhere. So there's always something to catch.
I love it. I love it, Gareth. Well, there's been really a whole wealth of knowledge that you've shared with us on the Nestro podcast. And well, I personally want to thank you on my own behalf. I also want to thank you on behalf of the Birb Nest community, on the behalf of all the viewers and listeners for coming over to tonight's show for the Birb Nest community, and not only. And this is a kind of reminder for everybody who's actually not subscribed to our channel just yet. Make sure you go ahead and try to shoot a like, thumbs up, hit a subscribe button, turn notifications bells on, and as well, please make sure you find Gareth Soloway on Twitter. This is exactly the same handle as in the name, Gareth Soloway. We're going to make sure to actually just get well identified, I should say, informed with inthemoneystocks.com. Perhaps, do you want to say anything just to close off for the show about the In the Money Stocks, where people can find you more to learn about your trading styles?
Yeah, sure. So inthemoneystocks.com is for stocks and basically trading, shorter term swing trading, where we get in and we get out. I usually look for 10 to 20% gains over a week or two. And it's great. I put out every trade I take. I just put out with exact entries and exits. And I do a video every single day on the technical analysis and teach people. And then the other one I'd love to mention is Verified Investing Crypto, which is just cryptocurrencies. And again, same thing. We've been in a bearish and down move, and I put up all my trades here. And you can see, again, we don't hit like 100% winners, but it's just consistent, many winners, consistent. And again, I do a video every day in the service for members as well to kind of keep them informed. So I really appreciate you having me on the show. It means the world to me that I can kind of talk people through maybe some investing knowledge and stuff that I've accumulated over my career. And I really appreciate it, Adrian. Thank you so much.
Thanks so much, Gareth. Ladies and gentlemen, one more time, huge round of applause and huge words of appreciation coming all the way to Gareth Soloway. From my studio in Poland, it's been Adrian, CryptoBirb, speaking to you guys, hosting this very episode of the Nest Show podcast. Thank you so much for coming, Gareth, and I see you guys on the next shows. Cheers and God bless.